Hey, what's going on, guys? John Fibonacci here. Welcome to my YouTube channel. And today, yes, we get to do an awesome video. Who created smart money concepts? So I think there's a common misconception around smart money concepts, who created it, and stuff like that. So what I'm going to do for you today is give you some information to allow you to come up with your own opinion, in regards to who actually created smart money concepts. So I'm going to show you some evidence. I'm going to give you my personal opinion at the end of the video. So make sure you watch the whole thing. And, that's going to be it. So I will go ahead and jump right into it. So a lot of people think that I created things or that I claim to create things, but I did not. So the Merriam-Webster dictionary, okay, definition of an author is the writer of literary work, such as a book. And the second one is one that originates or creates something, i.e. a source. So I did not claim that I originated or created anything in my book. I don't have it with me here, but I will show you mine in just a minute. So the writer of a literary work. So that, okay, is the definition. That's the first definition. And that's the one I'm trying to portray to you. Okay. Just the writer, but I did not create smart money concepts. Okay. So we can go ahead and clear that up. All right. I did not create smart money concepts. John Fibonacci, 29 years old, did not create smart money concepts. All right. So recently on Twitter, okay, and I'm not trying to start no shit today, but sometimes we got to clear things up. So when I launched my book in 2020, I think it was March of 2021. So it was about 2 years and some change ago from the day of this video. And it's funny because I made my book 36. I think it was 36 at the time. It might have been 37, but either way, it's like under a $40 book, right? Now, when I launched it, everybody and their mom was hating on it. They didn't like it. They thought I stole, ICT concepts or whatever. But here we are 2 years later, a little bit over 2 years later, but you have people that are launching courses for 127 bucks. That was Romeo very recently. Now, I'm not hating on Romeo. I'm not really hating on MMXM either. So I think both of them have provided things to the trading community, especially on Twitter. So I don't hate these individuals. I really don't hate anyone, but we got to, again, clear some things up. So I personally just find it ironic that, I sold my book for 36 bucks. It's still on Amazon. Okay. And I don't receive a $36 commission, just so you know. All right. Amazon gets their cut, and then it costs to print, the book as well. So there's a lot of costs that go into it. So I really don't make a lot of money from that, just so you know. But it is ironic. Everybody was hating on a $36 book, but now they're selling courses for $127 and $247. And I said, that's fucking wild. So, of course, the Twitter algorithm put this in front of MMXM, or someone probably sent it to him. And that's fine, because that's his, latest course, I guess, that's coming out very recently, is a $247 course. And that's fine. I have nothing against that, but it's just funny, and it's ironic that, people are selling things for way more than what I did. It's like 2 years ago it was frowned upon, but now it's just generally accepted. Like the same people that were hating back then are now, doing this. So it's just funny. That's all. It's just funny. But anyway, so he said, the difference is you stole ICT's work, just dropped his individual concepts into a book. You shamelessly sold it as your own findings. I'm going to disprove that as well here in just a minute. Until this day, you still lie about it. ICT even talked about you in one of his market commentaries, actually more than one commentary. When I was in his mentorship in 2019 for a few months, it was more than once that he had mentioned me. And even to this day, every once in a while, he mentions, Amazon this or Amazon that. So, it's definitely more than once, but it's fine. It's free promotion, if anything. But anyway, I commented, I said, how is it that I have sources to other authors? I'll wait, and never once claimed to own anything. You, just like the most of the ICT cult, are misinformed. So Rocky Trades _ again, no hate. Just, it's public information. They commented. So Rocky Trades underscore said, never once claimed to own anything, maybe give credit. And I I commented and said, you didn't read the book LMAO, just like everyone else who talks shit about it. So when we talk about crediting sources, let's talk about it. So here's my book, Advanced Technical Analysis. This is the old cover. Actually, I just changed it earlier this year. It looks a lot better than this one. Okay, but right at the beginning of the book, you can see up here that it says, also special thanks to many of my trading mentors, Ashraf Laidi, Chris Laurie, George Angel, Jack D. Schwager, Jake Bernstein, Jesse Livermore, John J. Murphy, Larry Williams, Linda Rasch, Lawrence Connors, Lee Lowell, Mark Douglas, Nomi Prinz, Paul Tudor Jones, Paula T. Webb, Richard Dennis, Richard Wyckoff, Sam Seiden, W.D. Gann, and many others. Without their knowledge and experience, I would not be the trader that I am. And I mentioned my my best friends as well. So the names are just in alphabetical order. They're not in any order of importance. But today we are going to take a look at some of the work by Larry Williams, as well as where's his name? Where'd it go? George Angel. Okay, so we're going to look at some of their work and see what they got going on. But yeah, you can see all references here. Here's George Angel. That first one. This one's an article, bar chart, a few other ones, Investopedia, ForexLive.com, The Disciplined Trader by Mark Douglas, Trading in a Zone by Mark Douglas, The Complete Trader by Paula Webb. Some of these I put in here twice on accident. I'm not perfect, and you know, it is what it is. Actually, there's a couple of spelling mistakes still in my book as well. So look, I'm not perfect. All right. So I never said I was, and I never will be, but there it is. I also included routers for the ex-JP Morgan executive for market manipulation. I believe that was about the metals. So, you know, there's that. And a few other websites and some books. Okay, How I Made $1 Million Last Year Trading Commodities by Larry Williams. Again, I did that one twice. That was a mistake. And then Quarters Theory as well. So we want to talk about sources. There you are. You know, there's me crediting some sources. So there you have it. All right. So again, with the irony, okay, now I don't know if MMXM was hating on my book a few years ago, but a lot of the guys or girls who are on Twitter who are really big fans of ICT that have a large following, you know, a lot of them, you know, were just with ICT on this one saying like, oh, you know, I stole this, I stole that. You shouldn't sell courses, you shouldn't write books, you know, yada, yada. You know, if you're a really good trader, you make enough money anyway, all that type of stuff, right? And then it's just like, bam, now everyone's, you know, launching their own stuff. So, you know, I'm not hating on it. If anything, 247, I'm sure you'll probably get some value from MX or MMXM trader. You know, like I said earlier, he's provided, or they have, I don't know if it's a guy or a girl, but they have provided, you know, value to the community. So, I mean, if you want to buy it, go for it. But again, I just find it funny. 247, you know, but a $36 book was bad. Like, all right, bro. All right. So now we can get into the heart of the video. Who created Smart Money Concept? So this is one of the books that I credited. How I Made $1 million Last Year Trading Commodities by Larry R. Williams. So easily you can do some research on who Larry Williams is, what he did. Robbins Cup winner, like 1,000%, turned, I think, $10,000 into like 1.2 million. I think it was like 1.4 or 1.5 at the peak, and then it broke off a little bit, but still like $10,000 to 1.2 million in 1 year. Really, really impressive, and nobody's broken that record. And I don't know if anybody will ever break that record, but it's impressive. Okay, so in this book, you have it right above my face right here. It says copyright 1979 by Larry R. Williams. So this book was published in 1979. So that was quite a long time ago. So it is 2023. That book was published in 1979. So over 40 years, like 44 years ago. Okay. So Smart Money has been around for longer than that, but the public education of Smart Money has been around for it at a minimum 44 years or 43 years and some change. So here, all right, on page 31 He talks about smart money tools. Okay, so smart money tool. Wonder where you've heard that before. This is the third one on page 31, and actually, I will zoom in on it so you can actually read it. So, my third smart money tool, the third and final $1 million fundamental tool that was given to me by Bill Maheen, who I mentioned earlier. Earlier in the book, he mentions this guy, and I think that was the guy that worked. I don't know if it was Merrill Lynch. It's been a while since I read this book, but he worked for like some really big bank or something like that, and then he taught this to Larry Williams. But anyway, Bill's tactic is to determine what the commercial interests are doing in a commodity market. To fully understand the data, you need some of the rationale behind it. Here goes. To begin with, you should know that the largest short seller in any market tends to be the commercial interest. These are smart money people. This is because the commercials are always in the market spreading and hedging their actual positions. Certainly, speculators are also short sellers, but the majority of short selling is done by the commercial interests. Knowing this is important because it is possible to keep track of how much short selling is taking place in the market through the use of open interest. Open interest is a total position of the longs and shorts in the market. There is a buyer for every seller. In other words, they are evenly matched. The open interest figure represents the number of open, long, and short positions. The figure is available each day on the broad tape as well as in the following day's newspaper. Now, obviously, you can tell that this is old because that doesn't really come out in the newspaper anymore. And so you can actually get open interest on barchart.com, and it's free, done electronically. You don't really need it. We don't really use newspapers anymore, so there's that. All right, so we'll also take a look at Winning in the Commodities Market by George Angell. This book also right down in here at the bottom right. This was also published in the same year, 1979. Okay, Winning in the Commodities Market by George Angell in 1979. Here, obviously, the copy that I have is very old and it's yellow. It's like falling apart. I really don't want to flip through it too much because I feel like it's going to fall apart. But it's 40 something years old. So crazy. But yeah, page 130. And then actually, we're going to take a look at that third paragraph right here. All right, so we're going to zoom in a little bit. And here's what it says. Professional traders and those close to the market often keep what are known as mental stops. These stops exist only in their heads and are not written down. The reason why some traders, and this is the part that I quoted in my book, but I said why instead of shy. So again, spelling mistake, my apologies. But it says, the reason why some traders shy away from placing stop loss orders is that many floor traders have a tendency to gun for stops. That is, they estimate that many stop loss orders exist just below the market, and they try to run the market down to take out or activate the stops and then run the price back up again. In the markets that are quite volatile, like the pork belly market, which doesn't trade anymore, again, gives you how old the book is, the price might be limit up on the opening, limit down at noon, and limit up again at the close. For traders with close stops, those resting near the market, some commodities are virtually impossible to trade successfully. However, if you do decide to rely on a system of mental stops to trade the market, you must have iron discipline. If you refuse to take your losses when they are small, they will surely grow larger to your subsequent regret. Okay, and then he goes on and on. But, this book, in my opinion, that third paragraph right here, makes it all worth it. And you can get this book for cheap. A long time ago, when we first started promoting this book in 2019, and even in 2020, it was impossible to find this book, but it's still out there now. You can find some copies for like 20 or 30 bucks. But either way, that paragraph right here, this is fire. Okay, so George Angell, who was that? You can do your own research, but I will tell you that George Angell was a floor trader. I believe it was for the S&P a long time ago, obviously. But to take the idea that stop running exists, when we learn something, whether it's a concept or whatever, or an idea or a theory, it is important to understand who it came from or who the original source is. So the fact that you have a floor trader who's telling you that, look, floor traders run stops, okay, that is reliable in my opinion. And I've talked about this book for many years as well. And I'm not the only one. So, but there's some proof. George Angel, I don't think he says specifically smart money, but you know, the idea that the market is manipulated and that stops are ran, you know, that is not an idea that has been around for only 20 or 30 years. This idea has been around for a very, very long time. Okay, so there you have it. All right, so we'll also take a look at The Secret of Selecting Stocks for Immediate and Substantial Gains, also by Larry Williams, one of my favorite books. Okay, I zoomed in for you as well. Copyright 1986 by Larry Williams. So not in the 70s, but a little bit later, still in the 80s. And we'll talk about why I like this particular book is because of this right in here. So there's a little bit more to it, but this is like the one page that I feel like is super important. And if you're going to buy the book, page 18 is really solid. So he talks about accumulation or distribution. So it's right here. It's obviously right in here. And I've taught this concept for a long time as well. And it's not just applicable to stocks, obviously other, you know, assets that correlate and everything, but here's essentially what it looks like and what it says. So in case you haven't guessed it, the distribution pattern is just the reverse of our accumulation pattern. What we're looking for here is a stock that has consistently underperformed the market. The most apparent example would be a stock that has failed to rally to a new high while the market has moved to a new rally high. As you study chart 6, notice that while most all stocks as represented by the averages, like I'm assuming he's talking about the S&P, Dow Jones, NASDAQ, were able to appreciate in value. This particular stock was not. Selling was coming in at a time of overall market bullishness. Certainly, we cannot ask for a better sign of professional selling or distribution. So in a classic distribution pattern, we will see the market move up to a new rally high while a stock under professional distribution, okay, under professional distribution will fail to make the same new high. The extent to which it falls below this new high gives us an indication of how aggressive the distribution is. The greater the failure, the more hurried the professionals are to get out of the stock. Okay, so professional accumulation, professional distribution. There it is right here from The Secret of Selecting Stocks for Immediate and Substantial Gains by Larry Williams. So at the end of the day, who created smart money concepts, otherwise known as SMC? Here's my answer, guys. My personal answer is many people have contributed to smart money concept, or the realm that we have now of smart money concepts, because it's quite a lot of things. But some have contributed more than others, but ultimately I think it's more than one person. Okay. At the end of the day, we are traders who look for an edge and implement to potentially make money from the markets. What's important is learning what works for us and leaving the drama alone. The more time you spend arguing is less time on the charts, studying and learning. So that is one thing I do advocate for, okay, is to not spend so much time, you know, with the drama, with the bullshit, and to use that time more wisely, like reading or working out or studying or anything that's going to be actually productive. So I wasted a lot of time, you know, trying to prove things to other people or trying to argue with people who are not really going to conform to your opinion anyway, because they're going to stick to their own opinion, and it doesn't matter what you show them. Just like this fucking video, I show you guys that this shit has been around for over 43 years, and people are still not going to believe it, right? So you can make your own conclusion. All right, I've provided a little bit of evidence, not all of the evidence, obviously, but a good amount of evidence of smart money, who it is, where it came from, and all of that. So, you know, did I create anything like smart money related? I have not. Okay. I never have claimed it. Pretty much everything that I've learned has been from others. Okay, guys, I'm 29 years old. What is someone who's 29 years old going to invent or create new in the market that hasn't, you know, been there already, or that hasn't been in the community already by someone else? You know what I'm saying? So what I use is tools from people like George Angel, people like Larry Williams, okay? And that's that. So find your edge, figure out what it is, you know, have your plan, and then just stick to that. All right. So hope you guys enjoyed the video. Thanks for watching. If you enjoyed it, you can like and subscribe as well. So yeah. See you in the next one.